very short Q&A session, maybe one or two questions, but I'm pretty sure that we have some time pressure because of the delay in the program. So please accept our apologies in advance if we cannot take any questions at the end of the panel, depending on the timing. So, Julian, if you allow me, let us start with you. As EBRD, one of the biggest stakeholders in the Turkish energy markets, how would you evaluate the markets and which trends, which products are more efficient or popular or fits best for the Turkish energy market? Can we get some general guidance and perspectives from EBRD's view from yourself?
Sure. First of all, very briefly on EBRD, we started activities in Turkey in 2009, and as of today we have invested over 22 billion euro, and actually I'm proud to say that in EBRD portfolio, Turkey is the #1 country right now, and with like 10 to 15% of the total portfolio. And last year we completed the year with 2.5 billion euro, and going onwards, probably the range will be similar. And in these operations we have in Turkey, renewable energy plays a very important role. And now with the Ministry of Energy's launching the new renewable energy scheme to reach to 120 gigawatt capacity by 2035, and this becomes even more important. As you know, currently the capacity established is over 30 gigawatt, which means for the 90 gigawatt every year, 9 gigawatt of investment to be made in wind and solar. And of course, together with the necessary infrastructure, both on the transmission side as well as on the storage side, when you consider all this, also our ministry has announced that in total, in the 10 years, there is a need of $100 billion of investment to be made. This means every year $10 billion investment to be made. And one thing which is very proud to say is that we have a very strong private sector, very proactive, very driven, and they really follow the developments very closely. And thanks to, of course, our Ministry of Energy's renewable energy support scheme, that's why Turkey was one of the fast-track movers when it comes to renewable energies. But with the involvement of course, the private sector, until now, we have achieved this 30 gigawatt. But going forward, to achieve another 90 gigawatt in the next 10 years, this means we cannot anymore talk about megawatts, but we have to talk about gigawatts. This means that there's a need for not just for the debt side financing, but also equity financing, which means that there's a need to attract international investors and financing to the Turkish market in order to facilitate that. As EBRD, in our portfolio, infrastructure and energy takes half of the total portfolio because of the size and long tenor. And as of today, we have financed 40 different projects with 3 billion euro. But when you now think about the sizes we are talking going forward, this is nothing. So going forward, not only EBRD, all IFIs, ECAs, as well as some other financing institutions will need to play a very critical role for the renewable energy strategy to be realized. And we cannot anymore do this with the straightforward conventional financing tools. That's why as EBRD, we are trying to develop different products. And while we are trying to develop these products, of course, some of the new technology areas like battery, like hydrogen, and other new technology implementations in the smart grid. And so this may require some long-term concessional financing or grant financing. That's why with the concessional financing sources around the world, we are trying to explain that Turkey is, because most of the concessional financing sources sees Turkey as a developed market, and that's why until now Turkey was not able to receive enough of the portion compared with the size of this concessional financing. So as EBRD, what we are trying to do is trying to take this proactive role to attract those concessional financing sources to Turkey such that we can blend it with our own financing. On the one side to take the tenor longer, and on the other side to make those financings cheaper, or especially for the expensive new technology solutions, to make them more affordable. And this is one area of the tool as EBRD we are trying. And the other area is, of course, bond market and capital markets. And I think with the conventional financing, we cannot really just move ahead. And the capital markets will have to play a very important role, both on the debt side as well as on the equity side. So that will be another very critical area that we will focus on. Probably you have heard of EFSD product by EU, which is helping especially for the green transformation of the economies. And now with the EFSD Plus program, Turkey is now part of it, and we have also applied for Turkey to benefit out of it. That's another very good tool, because with certain level of first loss guarantees, which we can use in our financings, again, to extend the tenor and to make the financing more tolerable, it's possible. So with all these different tools, basically what we are trying to do is going forward in the next 10 years, being more active. If you ask me, going forward, we will all talk about renewable energy and green energy solutions. And as EBRD, we are positioning ourselves to support these programs.
Well, thank you for sharing as well, Lisa. I'm pretty sure that what you guide to the market will definitely have a strong influence because of your footprint in Turkey. So thank you for sharing that. Already noted your remark regarding capital markets, and his rounds I will ask to Tabe. But now let's continue with the financiers' perspective. Let me give floor to Thomas and ask him. We have been doing some business in Turkey, and you are quite familiar with Turkey. How would you like to assess the markets? I mean, ECA is one of the strongest products for KfW IPEX Bank, which acts as one of the biggest ECA lenders in the market and in Turkey. How do you assess the product, and what is your general perspective on that front, Thomas?
Thank you, Charlie. And let me try something before. So it's bu pandemi varyasyonu devletimiz için teşekkür ederim.
Okay, thank you very much.
Obviously, you see Charlie wrote that for me, but it was very important for me to give you some words in Turkey, as I'm the only person here on the panel not being able to speak Turkish. And so I'm fairly new to the Turkish market, so I took over this role within IPEX to be a co-head for origination and structuring of renewables just last year. And now, but it's my 7th time, I guess, I'm here, and I really like it. And this is not only due to the people, that's for most and for your cities, but it's really because this market is very good, it's really stable, it has some very good licensing systems, and it's a good environment for an international bank to invest in. And I think that's very important, and this gives the possibilities to take all the instruments you just mentioned, Suli. So, and now we are coming more back to something specific, but as you mentioned, there are so huge investments necessary that I think for every financial instrument there will also be a part or its usage. And yeah, ECA financing is definitely one. Probably most of you know that it's a very well-established financing instrument when it comes to especially wind energy in Turkey. It's not only IPEX, but also our competitors that like to apply that. We did that in the last 3 years quite successful. So just to mention the YEKA 2 financing, where we were able to co-arrange that, to be the lead bank for steering the whole ECA process. What is important to do about that? It's really important to engage very early with the bank financing that, because the ECA process is somewhat special. You have to understand the ECA that wants to cover it. So in our case, it's mostly Euro-Hermes, because we have two very strong German turbine manufacturers here, which I'm very proud of. And if you have a bank that understands Euro-Hermes very well, and we have our specialists that do that, then the bank will help you to drive this process for the application, to get all the paperwork done. Environmental and social is something special about that. So we did that, and nowadays we are also the facility agent for this whole package. So it's a huge financing, the largest ever in renewables in Turkey. So over the angle of ECA covered financing. We also applied it for EACAT 3 this year, quite successful. So it's a real good story. And what is good, even if you have those other instruments, and even if you find financing from local banks again those days, and I think that's very important that you have this opportunity to finance locally. However, banks always have limits what they can spend on a single name. And if you take a cover, then you spare the limit on the bank. So the bank then says, okay, this is German risk, or with others it would be, for example, a Danish risk, but it's not the risk of your company. And so it's really sparing the banking limits. So that's why I think it's really important to do that. And even more when it comes to huge financial volumes, and I might just give you something where we supported Agfa very strong. It's NEOM. It's the largest green H2 facility that is under construction. There we also acted as the Hermes agent. And this is a $5 billion project, or $8 billion dollar project. And the more financing you need, the better it is to also have this ECA option and to apply that. And so we are really proud that in terms of Euro-Hermes, we are the strongest bank, so we have quite a good track record. And I can really advertise and say, okay, take ECA financing into account.
Well, thank you for sharing these valuable insights alongside with this international experience of IPEX. Very proud to have those achievements. Before passing to the investors, maybe let me go back to Tabe, taking the feedback of Şule. I mean, APH, the market operator, quite important for whole industry, the lenders, the investors, which provides great transparency and trust for all of the parties. So my first question is how you consider your contribution, and what might be the possible contribution of APH into this renewable energy?
Thank you, Charlie. So I think what's important to realize is I think we have similar goals, if not the same goals, everyone on the panel, and most everyone here at this wind conference. And that is this green transition, or to help this green transition, right? And to do that, I've been on many panels and many conferences. Everyone talks about the same few things. To do that, we need to facilitate financing. And what Şule said is very important. Not only debt financing, but equity financing is, I believe, more important than debt financing in this realm. And the reason is because what is wind energy or solar energy, specifically these two types of energy, not hydroelectric, not anything else, maybe nuclear as well. If you think about it as a financial product, these are actually annuities. These are bonds. If you go to a bank and ask them to underwrite financing for a solar project or a wind project, you're talking about a almost riskless investment where the bank's major decision is this return on equity enough for me? it's not a business, it's not farming or IT or high-tech something. It's a very simple calculation in my estimation. So how can we help this? How can we help this transition? EPH is currently the commodity exchange of Turkey. We buy and sell natural gas, our market participants buy and sell natural gas and electricity at our exchange. But now we are ourselves transitioning. We've applied to be Turkey's second stock exchange. So in coming months, if we get regulatory approval, we will also help finance this transition. So we already have an exchange in Turkey, as you know, and that's for mature companies that have been open for several years, that have several years of profitability, etc. That's great, and I think there's a place for that. But we need to help promote companies that are interested in developing projects like this at the speed of business today, and that speed of business requires more agility, something that we don't have in general in the current environment. So we will be transitioning to become the Istanbul Energy and Mining Exchange, to help companies get equity financing where they are, to access capital markets rather, because if you have a bond that you're selling, you can also finance that through capital markets, not necessarily equity financing, obviously, but it's still a bond that you can find a market for. And Turkish investors are unique in many places relative to the world. I've taught classes in financial literacy at Turkey's Best University, and I've also taught financial literacy classes to people who have zero education, relatively no formal education in finance at all. But in Turkey, I'm surprised to tell you that those people who have zero financial literacy, formal financial literacy, have at least as much financial literacy as students at the best university in Turkey. And the reason is because Turkey is a country where over the last 100 years we've had a lot of crises. And so people have learned to manage their money. If you ask an American, how's the US dollar? I guarantee you 99.9% of Americans will say, what does that mean? The US dollar against what? If you ask 100 Americans, what's the euro? Or how much is €1 in dollars? At least 70% will have no idea what you're talking about. Because there's never been this need. This isn't a dig at American financial literacy. Rather, it's this negative that Turkey has had, having crises in the past 100 years, has turned into a positive, where we have an investor class that is very much interested in increasing their return on their assets. As a result, I think we will have much success in financing renewable energy projects, wind and solar specifically, for people who are currently investing their money in, who knows, in interest-bearing instruments, in bonds, in other risky assets, because wind energy and solar energy are, in my estimation, frankly, just annuities and just bonds that you can invest in, and so the math becomes simple. And someone needs to be helping do the equity financing here, and that's a role that we are happy to, that we hope to take, and we'll be happy in implementing. So stay tuned for news on that. And if that happens, then I think we'll have retail investors will be able to access the returns that now institutional investors are currently accessing. Thank you.
Well, very insightful and very exciting news, to be frank, and very good to hear that the progress on the equity side and also the stock exchange side. I don't know whether that's the first time you announced, but very happy to hear. Okay, then it's a pleasure for Turev and for all audiences. Thank you for sharing. And now, maybe some perspective from the investor side. So maybe I can start with Elifan, one of the Turkey's pioneering renewable investors, which also has a footprint in the international area. Elifan, how do you see your company's role in shaping the sector, and how do you see the position of Turkey?
Okay, thank you everyone, and Turev as well, for arranging this opportunity for all of us. And maybe I should begin that energy demand is increasing. We all know that. And in the energy demand, electricity demand is increasing as twice as the energy demand. So there is a huge electrification going on globally as well as in Turkey, because right now the world is investing in artificial intelligence, in digitalization, and we are investing in electric cars. The climate change unfortunately forces us to use more ACs than ever. So okay, we need more energy, but more electricity than ever. So here comes the importance of the renewable energy. And as we look at the global reports in 2024, in the world, the total electricity consumed was coming 32% from renewable energies. In Turkey, that's 45%. As of now, like end of July, the total installed capacity of Turkey is 120 gigawatts, and 55% of it is coming from renewable energy sources. So for the last 20 years, the implied program, starting with YEKDEM, is working very well, that we can say, because we have increased the capacity from like 15-20% on the hydro to 55%, a mix of hydro, wind, geothermal, and other sources. So another need in the sector that I see is the collaboration between the policymakers and private sectors plus the banking system. So if you collaborate well with each other, we can find the financeable solutions, like where we can make it marketable in the capital markets as well as in the equity markets, as well as financeable, like bankable from the financial institutions. But in order to come to that phase, we need to have a sustainable system as well, where we need to invest in the grid, including transmission and the distribution regions, as well as we need to invest in the storage. While doing that, the policymakers step in. Let's say global strategy is important because they need to guide the investors, the bankers, all the resources, like financial resources, to the best optimal solution that the country needs. So we are, I think, in the path of achieving that goal. But I need to emphasize that we need to get together more often as policymakers, investors, and the bankers.
Wow, thank you, Elif Hanım, and thank you for highlighting this importance of collaboration between all the stakeholders, like the investors, financiers, regulators. So I think that's one of the key success areas that we made this significant installed capacity in Turkey, which can be counted as a success. Now, let me ask Eray Bey, again from an investor perspective, but this time international investor who has footprints in Turkey and worldwide. How do you see the main opportunities in Turkey, and if may I ask, what might be a kind of comparison for these opportunities between Turkey and international areas? I mean, of course, depending on your experiences.
Thank you. I also would like to thank to the panelists and the audience for their interest. So what we see is actually in the region, the countries have very, let's say, ambitious and aggressive targets in terms of renewable energy investment, as well as our country. So by 2035, the target is to have 120 gigawatt of totaling solar and wind energy. Especially and also the supported by the transmission line investments. So I believe that this needs also supported by the battery. And total of $110 billion of investment is required, not including the battery investments. So having said that, the countries are very aggressive to attract those investments due to the increasing demand. But this is not only energy need. Also, this means also the base of energy need. So this could be ensured with the renewable energy investment plus some battery that smooth out the energy volatility. So to decrease those investment costs. So the question is, $110 billion of financing for Turkey. The big question is how to finance this and what is the cost of that finance. So to decrease this cost, what I think the lenders are asking for to make a proper risk allocation among the stakeholders. So what I mean with the risk allocation is to allocate the risks to the relevant stakeholders, let's say. So there's of course some expectations from the entrepreneur and the investors. So basically what the lenders are expecting is to manage the parties properly, coordinate them, and ensure that they ensure the proper risk allocation through some legal framework. And this is what we see also in the other countries. And to ensure that the plant becomes online on time. And this is the expectation from the investor. So it starts with the right EPC selection process. So the EPC party should be very credible and should have required financial strength. So because this I said that the proper risk allocation. So, of course, EPC companies have some responsibilities and obligations, let's say, which is also asked by the lenders. So, this is the first step that we need to do, and also required by the lenders, let's say. And, of course, during the commissioning period and construction period, EPC takes the responsibility to deliver the project. In case of, let's say, deviation in the timeline, and EPC needs to be financially strong to compensate the costs of the investor as well as the lenders. But of course, sometimes there are some events that cause the project to delay, but those events are uncontrollable. So in such scenarios, the government needs to support the investor and also the EPC. So this is also maybe formalized within the contract, which normally in ACWA Power, our business model is to make agreement directly with the governments. So our model is IG, like intergovernmental agreement. So in region like Uzbekistan, Azerbaijan, so some securities are already provided by the governments and also guarantees. So in such a scenario, like the uncontrollable events during the construction period, so governments also support us and give some allowances to us. So here, the one of the key items that has that causes the credit cost to decrease is the government support and some guarantees provided by the government. And so after the EPC selection and with having the support of the government, so we need to make some proper environmental impact analysis, which is also required by the international investors. Sometimes because the government's standards and the international lenders' standards are not same. So in order to avoid any surprise during construction period, then you need to make a proper environmental risk analysis study, which is also the case in the Central Asia and also the Gulf region. So another most important, I think, requirement is to have visibility in revenues. and some guarantees. This is what we focus on. So this could be ensured by also the government's guarantees. So in other regions like Uzbekistan, as I said, the Gulf region, so government is the off-taker and they provide some guarantees. Since we have long-term agreements, maybe 50 years, 20 years, 25 years, so this with the guarantees, this provides visibility to the lenders, which also makes them much more comfortable to finance that project. And this is also one criteria that, I think, most important criteria that ensures lower or cheaper financing, let's say. And in Turkey also, YEKA projects also provide such kind of long-term visibility, so which is good for the country and also attractive for the international investors. And that YEKA project also covers the purchase guarantees, so the investors is a bit sure that and also lenders sure that the revenue will be there. And also there are the macro risks that lenders would like to feel safe, like FX risk or inflation risk. So there are some hedging mechanisms should be in place to manage FX risk and the inflation risks. And what they look is the technology risk also. So once we agree with the technology provider, the technology should be proven, first of all. I think they are not financing the unproven technologies, right? Especially, so the technology needs to be proven, and the technology provider should provide some guarantees at least some period of time. Then they have a requirement to make insurance and the from high-grade insurances to eliminate the technology risk. And so there are of course some events like force majeure, for example, which are out of control of both investor and government. So in the region, like in Central Asia, for example, we do also some risk allocation, not to spread that risk over to the lenders. We would like to ensure that those force majeure events needs to be somehow controlled or managed, or had a minimum impact on both the investor and to the lenders. So those are the most most important facts or the criteria that we are focusing on as an international investor.
Well, to be frank, we can use your speech as a financier, because what I see, we have pretty much same perception. And thank you for framing all these important issues as an international investor. And thank you all for efficiently using the time on the first round, and in the second round where we will more focus on the challenges and the opportunities. We still have like 5 minutes for each speaker, so maybe again with the same order, I can start with you, Shulem. As one of the leading DFIs, how do you see the opportunity, stress, and what is the market outlook from your perspective in Turkey?
Well, as I said, opportunities are there, lying, and actually Turkey is, for EBRD Atlas, I can say, among the countries of operations that we have, Turkey is the most developed country, with thanks to its very strong private sector. As you know, as EBRD, actually, we are private sector focused financing institution, and to support them to achieve their strategies and goal, which is very much aligned with the country's priorities. And in that respect, opportunities are there, and thanks to Ministry of Energy for putting the new renewable energy scheme, because one of the questions which was always raised to us by investors or any kind of financing institutions is where is Turkey going? And until the new renewable energy strategy was launched, although everyone was aware that authorities' intention is to increase the renewable energy in the total composition of the established capacity, there was not a clear defined goal. And now at least we know where Turkey wants to be by 2035, which is a very important parameter, especially for those investors who want to invest in Turkey. So opportunity is there, and of course this opportunity is supported by all the technological developments all around the world, because the whole world, in order to achieve the climate change prevention targets and Paris Agreement alignment, also as you know on the EU side with the green economy transition targets, there are when you look at the whole world is running towards the green transition, and this green transition is in all areas. And renewable energy there is really more facilitator. But when you look at, for example, the industry side, as you know, in 2026, CBAM, Carbon Border Adjustment Mechanism, will be implemented by the EU, which means any product to be imported into the EU, if they are not meeting certain criteria for the carbon emission, they will be charged with the tax, which will make these products very expensive. And for Turkey, EU is very important because EU is the major market for the exports of the Turkey, and very critical role. So Turkey has no chance but need to somehow speed up the green transition in order to be able to still stay competitive in the EU market, and without having these charges of the CBAM. I mean, our climate law has become now in force, which was a very important for the development of a number of policies to complement, to speed up the green transition, so that the CBAM policies are in place. As EBRD, we work very closely with Minister of Industry in order to determine what is the real cost of CBAM to our industry, especially those in the exports, and hard to abate sectors like steel, aluminium, fertilizers, and cement. We have developed a roadmap for the low carbon pathway of these industries. And then afterwards, we have developed this TDIP, it is called Turkey Industry Decarbonization Investment Platform, where we are inviting various financing institutions, including IFIs, to create a kind of platform such that this can be used to finance these opportunities, I'm calling, because those investments need to be made. This is opportunity. But the problem and the main challenge is always on the financing side and limited sources of the financing. That's why these investment platforms like TDIP, probably we will in the future, very near future, we will also have renewable energy investment platform maybe. But we need this kind of tools now because the sizes are huge. And we cannot anymore talk about megawatts, which means when we are talking about gigawatts, then we are talking about billion-dollar financings. And neither EBRD nor any financing institution alone can finance all this. So you need to bring always various different sources together in order to be able to make this projects finance. And as I said also in my previous discussion, the opportunity is there, but there are a lot of bottlenecks. And one of the important message I would like to give using this opportunity is that there are still a lot to be done on the authority side, because there are certain areas which needs to be improved in order these opportunities to be realized. And one of the areas is the regulation side. As you know, in Turkey still permitting process is a nightmare. And okay, our minister has promised about the super permit process, and there's already kind of preparations going on in Ankara in that respect. But that's a very critical area, for example. Another very important area, when you think about renewable energy investment, you cannot think about this without having the storage side together with it, because we have already seen the experience in Spain and Portugal. Suddenly, one day, everything stopped. People couldn't even buy bread because everything is done with the credit cards, and credit cards were not working. So this makes it very clear that right now using renewable energy, in order to make it work like a stable energy source, you have to have the battery storage, because during the evenings there is no sun. and you cannot really have solar. So you need to, during the day, you need to somehow store it somewhere such that it can be used during the evening. So that's why there's a big opportunity on the storage side as well, but there's a lot to be done on the regulation side, because right now still the revenue scheme is not clear. What kind of benefits will be, the storage projects will be there is not really clear, which makes the sponsor sees the opportunities, our clients see the opportunity, but they are not able to speed up the investment. And there are things to be done on the authority side. Maybe I should stop here just to give more words to my.
Well, thank you. You frame in a very good way, to be frank, all these bottlenecks, and it's also good to hear that you are much into this regulative changes, and we all know that EBRD is one of the important institutions in Turkey and has a great influence on the market. So we're happy to hear that you have those close coordination and communication with the regulators, and I'm pretty optimistic that it will be much easier for the investors, the market operator, and for the finalists as well in the upcoming years. And maybe from the ECA perspective, as an ECA lender, Thomas, which risks are the most challenging one for the ECA, and how can we, as an international financier, can support the Turkish market by, in terms of mitigating those risks in Turkey?
Yeah. So, being a debt guy, of course, risk is what I look first at. And I think there is a risk which doesn't appear as a risk at the first moment. But what I said earlier is that you have a very well proven track record in supporting renewables. And that comes with extremely efficient supporting regimes. So look at the last YEKA auctions, very, very low tariffs. And I know that also from Germany, and that looks very, very good from a overall economic perspective in the first place, because energy power consumers get cheap power, right? But in the long term, and given that you really need to invest a whole lot of money, it's not only the equity, but also the debt side that needs some cushion for risks that might really turn into damages. And there I see a first place. And then, so you already mentioned all things around granting access, giving licenses, and so on and so forth. That, of course, hampers also us as a bank. And this is not only because we would like to finance even more projects, but this is so we just talked to a client. We need to understand when do they get the permit, because without a permit, we can never give any money, disburse any money, and this is especially true under ECA covered financing. So your lenders won't give you the cover if the final permit is not there. So these are two major risks to mention. Then you mentioned also storage. That's something which is also coming to my mind. So then what we see in other markets, so I'm prepared to finance merchant risk in some markets in the world. So these are the most advanced ones. But you definitely need a very good power market regime there for stable market prices, predictable market prices, to finance a time after the feed-in tariff. So how do you deal with that, all of that right now? It's, for an international bank, the first measure is getting an ECA cover. But what is also as important is to understand your local market. And this is why we are here, we have our rep office, and without this rep office we wouldn't feel that comfortable. So it's not just you take ECA and then everything is good, but you need to understand the market and feel comfortable with the market. And we do that via our colleagues here in Istanbul. And of course, I said it before, we like the local financing community because we can diversify the financing structure, and that again makes some sense. So
a local bank might be in a position to act not faster, but disperse a bit earlier than we can do, because we rely on the cover. So this is where you can get to really good risk diversification. So we did that, for example, in the YICA transaction, where we had, besides DFI tranches and cover tranches, also commercial tranches. Again, what we can bring here is our international expertise. So we know many markets, and for me, Spain is not a problem because of the blackout. So that is really, in terms of financing, nothing that matters much. But for me, Spain is a problem for already since a longer time, because they have so many negative hours there that you don't find a good remuneration for a PV plant. So I guess the Turkish community of developers, of finances, of equity investors, everyone can also really gain from those experiences from international banks. And finally, it's more the BRD job, but I think it's good if international commercial banks also engage in the regulatory arena, and that's why I'm very happy that Çağrı is taking that extra mile.
Well, thank you for sharing the perspectives of Netherlands, and thank you for highlighting the importance of the web office. Well noted. Taha, you already announced the good news, and maybe we can ask more, but I'm just kidding. But referring what you have recently mentioned, what might be the challenges, or what would you like to say on top of?
Well, I'll mention a point from Şudan, and mention the CBAM situation. EPH is has been legislated as the operator of the ETS market in Turkey. So if you need to buy credits for CBAM in the future, you'll be coming to our market. The bad news is the European Union doesn't know what it's doing as far as CBAM yet. In July, I was at a conference in Vienna, and the Director General of CBAM was there, and he said, we have yet to decide many things, only 6 months out before the deadline begins, which is very saddening to see that the European Union has not done its homework. But maybe it's on purpose, by design. Maybe there's some reason there. Maybe it's a protectionism mechanism, not necessarily to protect the environment, etc., but to help bolster European manufacturers, which makes sense because we're in that era now globally. So that's both an opportunity and a threat to people, that they should be following the news on this and being able to follow the market in this respect. The other more important thing, both previous speakers talked about it, both Thomas and Şule talked about battery storage and base load, which is so important. Without base load, you have to have battery storage. If you don't have battery storage or base load, then you're in a problem. You have a problem globally. So will the technology for battery storage outpace the need for electricity from all these data centers, AI, etc.? That's the multi-trillion-dollar question. I don't think it will, unfortunately. As a result, I think we're going to need baseload, and that's why Turkey is pushing into nuclear, as you know. But we have had interesting conversations with many large international companies that many of you have heard of. These are literally trillion-dollar companies who want to set up data centers in Turkey and are asking for $3 billion worth of energy. They want to pay upfront for $3 billion worth of electricity upfront because they have this need, they know it's coming, and potentially EPH will be a place where that can happen. We can securitize some sort of thing so that there are companies that can prepay for electricity many years down the road. That means nuclear, frankly, at that scale, and it means other things. The European Union already has 70 plus nuclear power plants, so I don't think that's going to be an issue with Turkey setting up their nuclear power plants. We're surrounded by nuclear power plants. All of our neighbors have nuclear power plants, as you may know. To the European Union, to the west, to the east, and to the north, all the countries around Turkey have nuclear power plants. So I hear people objecting to that sometimes, but unfortunately, everyone has a brother in this neighborhood, so we need to get on that. So these are all opportunities that we need to be embracing. But the largest opportunity is for Turkey is its growth, its ability to grow. If you go to, I've been to many meetings where they show a graph of the electricity consumption for European countries, some of our neighbors who I won't mention, and the graph goes down. It goes down. There's actually a decrease in the amount of electricity needed for some countries in Europe in the coming decade, etc. So that's a challenge for them. We're not in that situation, fortunately. Negative rates, as you know, we're talking about zero and negative tariffs. That's a major threat. How we'll weather that is an important step. I'm normally an opponent of regulation in general, just how I've been brought up, I guess, but I think there is a need for regulation, especially speaking about what happened in Spain. The promotion of amateur, or not amateur, but retail production of solar energy in Germany specifically is a problem for the Germany TSO and the operators there, as you may know. And this is something that was obviously with good intentions was really promoted, but I think that's causing a problem. So we need to do some regulations, obviously, to follow the regulations and make sure that we need to be quick, but at the same time be measured so we don't have these major problems. So I think it's a very interesting time to be in energy, and Shuram specifically is in a very interesting neighborhood with a very large portfolio, and so I wish her and everyone else luck. And I think it'll be interesting to see what our private sector colleagues talk about as well. Thank you.
Well, thank you sharing all these good insights and well noted on the regulation again from the market operator side as well. Elif Hanım.
Yes.
Again, the same question.
Yes.
Challenges and the opportunities from a Turkish
So
investor.
the most important thing for the investor is the IRR, return on equity, and also for the banker, for financial institutions, their risk appetite will also determine their return on the debt, so the interest rate. Okay, so the importance of the IRR, it has two components. First, timing. You need to receive the money when you plan to receive the money. So you do the feasibility, there is a timing perspective, and also there is another perspective where you get your revenues. So where regulation comes, either you receive money under a tariff or a ECA tender, but on the storage side, regulation is needed. Everybody is repeating it, and we need to know how the revenue model for the battery storage system will be in order to get financing for them, and we will be needing a lot of those in order to balance the system in the near future, not even midterm. And in order to achieve that, we need to, like I said, shorten the permitting and licensing periods, which will attract also international investors and equity partners in our country, because those projects will be needing a lot of equity, and just financing, even though our companies are very strong with their own balance sheet strength, it might not be financeable, because it will need billions of dollars of financing in order to invest in those big projects. It might be achievable with partners, which can be like equipment partners as well. They can be strategic investors or just financial investors. If we have a feasible model where the timing, won't change, where the revenue model will stay the same, then it will be very easy to finance. Then you can access all the financial markets. As Zorya Energy, we did work with a lot of financial institutions like commercial banks, IFIs, EBRD, EIB. We also did ECA on our geothermal project. And recently we did a Eurobond, a $1.1 billion Eurobond. If you have a viable bond-like Taha Bey explained before, bond-like revenue stream, and if you ease up the permitting as well, I think we can finance those projects in international bond markets as well. We can do green project bonds in order to finance those projects. We can build in, IFIs next to it. We can even introduce equity partners, international equity partners funded by IFIs and AAA rated other insurance companies, etc. What we need is to build a strong model which will relieve every stakeholder on the project. So that's that I want to add.
Yeah, thank you. But I understand that was the very first part of your speech with the ILR. And to be frank, it's $1 million question because it decides what the tender prices will be, how the feed-in tariff will be, decided. So from time to time, we also make these discussions with the regulation, and it's always the starting point. What should be the IRR of this investor? And then we go backwards and try to find the optimum. But thank you for sharing all these insights. And the same question applies to you, but if you allow me, I will ask you again in the same manner, if you can compare these challenges and the opportunities between Turkey and your global perspective, that would be really helpful for the audiences.
Sure. So, yeah, of course, Turkey has some challenges and opportunities. But for example, in Turkey, cost of capital is high, right? This is a challenge. But an investor could turn this into an opportunity if the investor manages the risks well and delivers his commitments, then this cost of equity realizes as a return. So this can be an opportunity also. And for us, what we see in Turkey is we see huge, high demand growth, and think about that in region, in Uzbekistan, for example, we already made around $15 million of investment. So considering Turkey has much more, higher potential to absorb such kind of such large projects. So as an investor, if we get into Turkish market, let's say, so there is always some project at the pipeline. Because Turkey's target is like 120 gigawatt of total installed capacity in wind and solar resources. So this could absorb the investment plans of large investors like Aqua and other competitors. So from demand perspective, we see a huge opportunity in Turkey, and Turkey has also neighbor to the Europe, which is also supports the electricity demand of the country, because the Turkey has Europe is one of the biggest export target of Turkey. So once the Europe recovers from GDP perspective and the industrial perspective, then this would be also an opportunity to Turkey. And thanks to the lenders that they are also interested in Turkey, and they are giving some commitment for the following 10 years. I got from the Shonan that so we would also reduce the cost of the project, and we can leverage that to increase our return to the lenders. So this is what we see in opportunity.
Thank you all for all the speakers, first of all, sharing all this insightful information with the audiences, and for the perfect timing, I can say that. We only passed like 35 seconds, which is, I think, quite okay, right? But sorry for not taking the Q&A session because we have all this delay in the program, but thank you again for the attendance and for the speakers. Thank you.